Okay, maybe in respect to everyone's time as well, especially our presenters who I know are, I'm sure, busy keeping up with all the latest changes, we will get started and welcome everyone to this presentation by the Business Resiliency Task Force. And if you're not familiar by now, it's a group that was formed early this year after the pandemic began, and it's the Grande Prairie District Chamber of Commerce working with the City of Grande Prairie and County of Grande Prairie Economic Development Departments, and just wonderful folks at those two organizations. We're so pleased to be working with them. I know we have a number of the representatives here on the call this morning, so thank you, Rebecca and Cindy and Lauren and Hetty, and everyone from those two groups. And we have our CEO Tanya here as well. And we've been working on a number of different initiatives throughout the year, trying to keep businesses informed of changes to various programs and making them aware of the programs that are out there, and then the announcements from the government and everything like that. And it's been difficult for all of us. It's been difficult for businesses. It's been difficult for individuals, and we appreciate everybody's commitment to our region and our community, and we hope that things start turning around soon, and that we have a better 2021. And so we welcome a couple of great guests who we've had before this year to present today. Just before we get to that, we want to mention one thing that we have going on right now with the BRT. It's we brought back the hashtag Love Local GP program on Facebook. We're giving away weekly prizes of $200 gift cards to any local business in Grande Prairie or in the city of Grande Prairie or the county of Grande Prairie. There'll be 5 of those $200 gift cards given away weekly. We gave our first 5 away last week. And then the grand prize draws on January 11th of $500, $1,000, and $2,000 gift cards. So just trying to support local business throughout this holiday season, and trying to put people or give people an opportunity to have a little Christmas cheer as well. Again, we know how difficult it's been, and we hope that we all wish the best for everyone. So enough of me rambling. I'd rather hear from the experts. So we are so pleased to welcome Heather Hillhorst and Tracy Leishman from MNP, and they will be talking about the various support programs for businesses and individuals, including the rent subsidy, wage subsidy, CEWS, and the Alberta relaunch grant. So without any further ado, take it away, Heather and Tracy.
Thanks so much, Tom. So I'm going to try and use technology here to share my screen so you can see my slideshow. So hopefully everybody's got that now. So thank you so much for the invite today to the Chamber and the Business Resiliency Task Force. We are honored to be here to present to you about these various programs. Also with us today is Carsey Wallen from our office. She's one of our partners, and she's going to be keeping an eye on the chat today. So if you have questions that pop up as we go along, feel free to pop them into the chat. We will stop at sporadic times to just make sure that everybody is, that we haven't lost anybody kind of in some of the technicalities. And it will address some of those more specific questions at those breaks. Anything that's really specific, we will either leave to the end or we'll ask for you guys to reach out to us directly. There's so many nuances with all of these programs, and you know, it's really hard to get into all of them and delve into them all in you know, an hour or whatever we have here. So without further ado, let's dive in. So as Tom alluded to, and as you guys have seen throughout the last 9 months that we've been in this, Things change very, very quickly. What we're presenting today is hopefully the most relevant stuff as of today's date, but recognize that it's all subject to change on a dime, and things could be out of date very quickly, as we know with various announcements. So please recognize that this is based on today's laws and practices, and if you have specific questions, please feel free to reach out. So just a quick agenda of what we're going to cover off here today. The bulk of our time is going to be spent on the Canada Emergency Rent Subsidy. Just like the CEWS or the wage subsidy, there's lots of different acronyms for this. Some call it CERS, some call it CERS. I'll just call it the rent subsidy, but recognize if we shorten it, it could be said as either of those two things. We will touch on the updates to the CEWS program, which is the Canada Emergency Wage Subsidy. And then we'll delve into just some overviews on a couple of the other programs, including the CEBA, which has recently been updated, individual benefits, and the relaunch grant, as Tom alluded to. So on to the rent subsidy. I'm so hung up on the wage subsidy. We've dealt with it for so many months. So on to the rent subsidy. So the rent subsidy was legislated here in late November, so November 19th, and it's intended to replace the CECRA program, or the Commercial Rent Assistance Program. There was a lot of complaints over CECRA just due to the fact that it was the landlord that had to file the claims, and they had to collect a lot of information from the tenants, and it just wasn't, it was cumbersome. So this new CERS, or rent subsidy program, was introduced in November, and it goes retroactive, dates retroactive back to September. So CERS allows both the tenants and property owners of all sizes to apply. So it's intended to provide support for both rental payments and mortgage support. And it goes retroactive to September 27th is the beginning of our first period. And right now it's legislated to run till December 19th. So this last period ends, I guess, the end of this week. It's been announced that it will likely be extended to the end of June 2021, which lines up with our CEWS extension as well. And it's for all qualifying businesses, charities, not-for-profit organizations impacted by the COVID-19 pandemic. So these rules piggyback off of the CEWS program. So a lot of the stuff we're talking about today with respect to how the revenue declines are calculated, they're going to sound familiar to you if you've already applied for the CEWS program. And that's why. It's because this program has been built on the wage subsidy program, the 2.0. And it is managed by the Canada Revenue Agency, like all of these various programs announced by the government. So with the rent subsidy, there's two distinct subsidies here that we get to work into. So one is the base subsidy. So this is going to be a maximum of 65% of your rental or qualified expenses, which we'll go into in detail. And these amounts have to be paid or payable during one of the claim periods. So the claim periods, again, starting on September 27th up to December 19th is what we know to date. Again, extension is expected. And so the maximum you can recoup is 65% of your qualified expenses under the base subsidy. There is a second amount to top up subsidy, and that's going to be up to 25% of your eligible expenses. We would be eligible for the lockdown support or the top up subsidy if at any point in time there's a public health order or restriction in place by a municipal, federal, or provincial government, or public health order to restrict or close down our activities. We're going to talk about specifics on the lockdown support as well, but recognize that this is going to give us another 25% top up depending on how many days that we have to be closed in a period. The only requirement for the lockdown support, other than a lockdown, of course, is that we have to have a revenue drop, period. So it doesn't matter how much of a revenue drop, as long as it's greater than zero, we can potentially qualify for the lockdown support. So there are maximums in place for these subsidies. So the maximum amount on the base subsidy we can claim is $75,000 of qualifying expenses per period per location. And so the maximum we would get is the $75,000 times the 65% if we maxed out. And then there's also a maximum for groups of companies or affiliated groups, which we'll delve into as well. And that maximum is going to be $300,000 of qualifying expenses for the base subsidy. There is no maximum on the top up. So here's just a quick little summary chart of what we're dealing with this rent subsidy. So you'll notice that we are referring to these as periods 8 to 10 up at the top of my chart. And CRA is referring to them as periods 1 to 3 because they're the first periods of this I keep saying wage subsidy, rent subsidy. The reason we're calling them 8 to 10 is to line up with the CEWS periods, just for clarification or just for clarity. So just recognize that little nuance in our presentation here. So the first period is covered off. It's, as I mentioned, from September 27th to October 24th. Period 9 would be the October 25th to November 21st, and period 10, November 22nd to December 19th. Period 11 and beyond are yet to be legislated, but likely extended into June 2021. So just like the CEWS program, the subsidy is based on a sliding scale. So I'd mentioned that our maximum for our base subsidy is the 65%, but it can be up to 65% based on what your revenue decline is in any given period. So the maximum we can recover, so I said that we had $75,000 worth of expenses for locations. So you'll see that my slide showing $48,750 per location. So that's assuming you get the maximum amount of the subsidy, this being the 65%. And then the maximum recoverable amount is the $195 for the group of companies. The top-up benefit maximum is going to be the $18,750, so that's the 25% there. And there's no cap on the number of locations you can get the top-up on. We just have to have a lockdown measure in place, and we have to have some sort of a revenue decline over the prior period or the prior year. There is, again, any revenue decline is going to qualify, and the amount of the subsidy is just going to be dependent on what our revenue decline is. So just to, I guess, point out some highlights, we've probably talked about most of these things, but to run through this highlight slide, any eligible entity, so if you're eligible for CEWS, you should be eligible for the rent subsidy. If there's any sort of revenue decline, we would be eligible. And this would be retroactive to September 27th, 2020 and runs to December 19th, 2021. There's these two components, the base subsidy, which can be up to a maximum of 65% based on a 1 month, and then 25% on the top up if we are impacted by a public health order. We have to run through the revenue reductions, which are going to be calculated similar or the same as our CEWS revenue reductions, and Tracy's going to run through those with us here in a couple of minutes. So hopefully we already have a lot of those numbers, or we can piggyback off of the CEWS calculations for this to make it a little bit less administratively heavy. And we're going to compare our revenue reductions to the same period in 2019 or the average of the January, February 2020 revenues. And we get to choose what reference period we use. But note that if we've already chosen a reference period for the CEWS, we have to stick with that same reference period for the rent subsidy. And the method behind that madness is, hopefully we've already picked the appropriate one that would qualify us for the CEWS, the one that has the maximum drop in revenue or the biggest bang for our buck. So that's the one we have to stick with as well. And in this, both property owners and tenants are able to apply for this. So I keep talking about the 65% being our maximum, but there are formulas that calculate what our subsidy is going to be. And this again is our base subsidy. So in order to get into the maximum, we have to have a revenue drop of 70% or more. And that's going to get us to that ceiling, the 65% subsidy. If we've had a revenue drop somewhere between 50 and 70%, you'll see the formula there on the screen. And then if we're less than 50%, it's going to be 0.8 of your revenue drop is going to be what our subsidy percentage will be. For the top up, it's not based on what your revenue drop is. It's strictly if you have a revenue drop and you are under one of these public orders, you would get into the top up. So it's a fixed 25%, but then that 25% is going to be prorated based on the number of days you were locked down because of the pandemic, divided by the 28 days that would be in each rent subsidy period. And that's going to come down, calculate what your top up percentage will be. So then if we look at this overall, we're going to look at our total revenue decline percentage, add in what our top up rate is, and then multiply that by our eligible expenses to figure out what our rent subsidy is. And then of course, that's going to be restricted by the $75,000 maximum per period per location. All right, and off to Tracy.
All right, thank you, Heather. And yeah, it's just as easy as that. And now we'll get into some of the nitty gritty here, because it sounds simple on the outset, but again, with all of these programs, once you get into it, we've certainly run into some questions and issues. But to start, we're going to kind of compare the criteria to the CEWS, and again, at least they've kept things consistent with everything. Of if you if you're an eligible entity for the CEWS, you'll be an eligible entity for the rent subsidy and the qualifying period. So quite a bit of this is the same, but now we do have an introduction of what is the qualifying renter, qualifying property, the rent expenses, and the percentage for the rent subsidy percentage. So we'll go through all of that. So we'll cover the kind of the first bit fairly quickly here. And I do have quite a bit on the revenue calculations, but I think some of that we will kind of go over because hopefully most people are familiar with it. But again, there might be people that the wage subsidy didn't really apply to them that are now looking at the rent subsidies. So our eligible entity, and this again, just wanted to briefly mention, it is just about all businesses except if it is a public institution or like the public school boards are not considered an eligible entity. So those are kind of the bigger ones that are exempt. And we have, they started off with a very small list of eligible entities and that expanded with the CEWS. So again, most businesses should qualify for this.
Did I go backwards? Sorry here.
Yeah. And then the periods, again, we'll just briefly talk about this. Heather's kind of gone over this, and there was some announcements. And of course, with anything, I was looking, yesterday, and there was some more stuff kind of posted to some of the draft legislation out there. So they have kind of said the dates of the periods 11, 12, and 13, but they still haven't passed the legislation on it. But we're kind of looking, this came out in the November 30th economic update from the federal government. So I would say if they're sticking with their 4-week periods, that should be what they look like. And then, so the qualifying revenue, and again, this is kind of where the issues for the CEWS came in. So we'll kind of briefly go over what that means. And if you're kind of new to looking at this for the rent subsidies, what you need to look at. So really they define revenue as being the inflow of cash, receivables, or other considerations arising in the course of ordinary activities in Canada. So these are your general revenues calculated as you would normally calculate your revenue. It does exclude, though, if you've had an extraordinary item, kind of a one-time event, that might be excluded. Amounts on account of capital. So if you've sold assets, that doesn't count as your revenue. A big one here that we'll talk about some more with it is amounts received by the eligible entity that was not dealing at arm's length. So if it's from a non-arm's length business, so if you own 2 companies and you're paying rent from one company to the other, we'll get into exactly where that fits in. And then if you have been receiving amounts under the CEWS and the temporary wage subsidy, those won't count in your revenues either. So again, getting into more kind of the general rule, it is your normal accounting practices, how you've been calculating your revenue, ignoring certain items. And then there is some special rules dealing with non-arm's length revenue where we can make some elections that we'll get into on how that revenue can be calculated. And then there is some special rules again for partnerships, joint ventures. Those ones we're not going to get into today. And if you are falling into some of these rules, we do advise that you talk to your accounting advisor, because this is where things can get tricky and you want to make sure you're on the path that provides you with the greatest subsidy that you can have available to you. There will be someone, the employer, it was the employer, but here will be the business owner that will have to attest and sign off with Revenue Canada when you are making your application that you have calculated the decline in revenue and it is correct. So with the prior reference period, so this is kind of going back again to the CEWS where they had made some changes, and both programs now will follow the same prior reference period. So you can either select the same month in 2019, so again September 2020, you can compare it to September 2019, or if you elect, you can use the average of January and February of 2020. But this election, so once you choose it, it does apply for all periods going forward. So they did allow a different election to be made for the wage subsidy on the first 4 periods compared to the next ones going forward. But once you've made that election, so if you made that election already for the wage subsidy, the rent subsidy will follow the same method. And as Heather had alluded to, if you've made the best selection for the wage subsidy, it should also follow and be the best selection for the rent subsidy. So just to watch that though. And then there is also some deeming rules, which we'll talk about as we go through here a bit too, where you can look to the prior month's revenue decline if the current month's revenue decline is less. So the example highlights this the easiest. So if we're looking at September and our decline was 27% and August was 33%, we can select to use the August revenue decline because it was greater and it was the immediately prior period. So this gives a little bit of certainty to know, okay, what rent subsidy could you possibly be looking at for the next period, knowing what the revenue declines are now. We were hoping that we were seeing a decline in our revenue declines, and I think we were this fall, but now, you know, circumstances have certainly changed where we might be getting higher revenue declines as we go from December into January. So again, we just have to watch it. You don't have to pick the prior month, but you can if your revenue declines are declining. So this slide got awful busy on me last night. And this is where the top are the periods that we do know, the first 3, but here was kind of how they've announced the next period, 11, 12, and sorry, that last one should be 13. And the interesting part here, and I kind of was wondering how they were going to handle, so the periods have always been 4-week periods. And so our 4-week periods end up being 13 4-week periods in a year, but there's 12 months. So it looks like they're going to handle that for our kind of periods 11 and 12, or sorry, periods 10 and 11, we're looking at December and November's kind of twice there. So just watch that as you're getting into your revenue declines for December, we might be using those for 2 periods. So just to watch that to kind of compensate from the 13 revenue subsidy periods and the 12 months that we're looking at. But again, like we said, the same method has to be used for both. So if you are calculating a wage subsidy and you do have a rent subsidy possibility, you know, hopefully you won't have to double up on the work and you've calculated your revenue declines and they'll be applicable for both. So the special elections for revenue. So there's 2 elections that we are kind of looking at here. There is more, but when it comes to the rent subsidies, we found that the affiliated entities election and the non-arm's length revenue election likely will be applicable for a lot of businesses. So these ones are looking at, and kind of to back up a little bit here, it's really looking at where you're having a property that is used by either in the business or rented by a business that is considered kind of what they call non-arm's length or affiliated. And the 2 definitions are different. So when we look at affiliated, we have to determine first, what is the affiliated group? What companies or individuals are part of that? And then are we making the election or not? The election applies then for the wage subsidy and the rent subsidy. So we really have to make sure we're looking at both subsidies before an election is made and looking at how it will impact the other entities in the group. So the affiliated, though, is a very, I guess, a narrower definition than non-arm's length. So we have to make sure we've got the right entities here. So this affiliated group, this is kind of coming out of the rules that they're looking at here. And an affiliated is really looking at the individual and their spouse or common law partner. And it's looking at, when it comes to companies, are two corporations controlled by either the same person, those two companies would be affiliated, or if one is controlled by one spouse and the other is controlled by another spouse, those two corporations are considered to be affiliated. And then it is kind of looking at who is actually controlling these companies and who is the individual kind of at the top of the chain with control, and is it an individual and their spouse that are controlling together? Those would be companies that we would look at as being affiliated. If there's a family trust involved, I'd say again, that's when you need to talk to your accounting advisor, because the rules get very complicated at that level to know, you know, and it might actually bring in more corporations that are involved when you have a family trust. So again, when we're making this election, it is on a period basis, but it might not just impact the rent subsidy, but it might also impact a wage subsidy being claimed by another group. So in making this election, though, if you've made it, you can now, instead of looking at the revenues of just the one entity, you can combine the whole affiliated group, because we've seen quite a bit now where one entity might still, you know, if it's the entity receiving the rental income, that might still have been paid, but the entity paying the rent is where your revenue declines have actually happened. They're the ones with the operations that have seen the impact of a reduction in their revenues. So again, this election is very handy and quite useful, but just caution to make sure we're claiming it in the right spot. So non-arm's length parties. So this one usually does entail the affiliated group, but it can also entail a few more. With non-arm's length, it looks to who you're related to, and not only includes you and your spouse, but would include your children and parents as well. So if you have a business that's very much a family business involving companies that are held by family members, now we might be looking at to see, okay, where is revenues coming from, and are they coming from non-arm's length parties? So again, we've got an example coming up here that really looks kind of at the rent subsidy portion. But if you do have a holding company that owns a property that's being rented to a non-arm's length company, so it might be held by another family member, say it's the parents owning the rental business and son and daughter owning the operating business, those are considered non-arm's length. And if the revenue is coming from the operating company that's non-arm's length, when we're back to the holding company, we have to not count our non-arm's length revenue, because that doesn't become part of our revenue calculation where we mentioned before there, but we can look at doing an election to actually go back to our operating company and include its revenue decline. So again, these ones get very complicated, and there is some calculations that are involved here, because sometimes it's not just one rental property that might be held in a company. There might be two or three, and they might be rented to more than one non-arm's length business. So again, it can get very complicated. And we do want to make sure that if we're filing these elections, that it is the right decision to make. This election on the non-arm's length parties, though, just impacts the entity doing the revenue calculation and receiving the revenue. So it's not quite as broad as the affiliated election. So my main goal here was to say that these are very complicated, and if you're down these paths, seek some help. And I would say we've had many discussions in our office about them, so we've talked amongst ourselves on how these all work. So it hasn't been an easy one. So this revenue reduction percentages. So now that we've done all this work and we've done our elections, not elections, and calculated our revenue decline, now this is where we're fitting in and determining, okay, now that we know our revenue reduction was X percentage, how that then goes back to the formula Heather had mentioned of what are we calculating now then for our subsidy claim? Is there a revenue reduction to get us into the top-up reduction? And then just what percentage we're looking at for that. So again, there's a lot of complicated areas with the revenue, and I say that's where we've had most of the issues on the CEWS, is working our way through them. But once you've kind of got your system in place to calculate it, then it just kind of falls now into the calculation. And again, they did bring in the sliding scale. So, when the wage subsidy first came out, if you're involved, then you knew either you had to have and I believe it was, I can't even remember now, was it 70% revenue decline and you're in or you're out. And now they've changed it to be here now, if you're greater than 70, you are at the maximum subsidy. If your decline is between 50 to 70%, it's a sliding scale again. And then if it's less than 50%, it's 80% of your revenue decline. So again, every revenue decline will now be eligible for the subsidy. It's just a matter of calculating what that subsidy will look like. And here, just kind of another way of looking at it, and how and right now, all of the periods that they've announced are falling in the same calculation for them. And again, if it's a greater than 70% decline, you're at 65%. Greater than 50 but less than 70, it is 40% times 1.5 times the revenue percentage decline minus 50. So again, this is where we've all started to really love our spreadsheets, and they're amazing to do our calculations for us. So it is just setting up spreadsheets to help you with this and doing the calculations. And I think it is just to watch, we don't know what's coming in the future here with what the percentage will be, but they kind of basically hinted in the November 30th economic update that they're going to be using the same percentages for the calculations from January to the end of March, or sorry, middle of March, I think is when the period will end, just because they know that'll be, it's always a tough time for a lot of businesses, especially in the retail type industries. So hopefully they will stick to it. So questions?
We do, we've got a couple. So for new businesses, so businesses starting either right before the pandemic, as the pandemic was declared, or throughout this summer, are they out of luck when claiming the rent subsidy?
And so with the rent subsidy, they went back to, and sorry, I don't have my dates off the top of my head here. It's back in September that they were looking, and I believe it was around October that you had to have a kind of a business number in place. And if you're paying rent to a third party, so non-arm's length rent, there needed to be a rental agreement in place at that point. And even then, when we went into the non-arm's length rent as well, there needs to be a written rental agreement in place at that point in time.
So businesses in September and October that had a business number and were paying rent could qualify.
Could qualify, correct, yeah.
Perfect. That's it for now.
Perfect. All right, so moving on. So now we've had the opportunity to look at what happens if we qualify and what our subsidy amounts are. So playing into that last question, let's look at how we qualify. So we've touched on a little bit of this already, but if the definition of qualified renter is as follows. So we have to be an eligible entity, and so eligible entities can be individuals, taxable corporations, partnerships, not-for-profits, registered charities. The list goes on, similar to our CEWS claims. We have to file our claim within 180 days of the qualifying period. And then we have to make the attestation, which Tracy already mentioned. And then the final one is we have to meet any of these restrictions or these conditions, not restrictions. So we have to have had a business number as of September 27th, 2020. We had to have had a payroll account as of March 15th, 2020. And we've had somebody else that's made payroll remittances on our behalf. So that would be in an example of like a cost share program, or in a situation where we have purchased business assets, from another person that already has met one of those other two criteria, we would also qualify in. And the business asset test and amalgamations, it gets a lot more complex as to whether we qualify or not. So it might be a good time to seek help on those as well. And they've left another kind of blanket number 4 in there, and it's considered to be other prescribed conditions. So what this does is it allows them to legislate something else without changing the full legislation at a later point in time. And there's no other prescribed conditions, I guess, at this point in time. So a qualifying property. So how do we know if a property qualifies? So it has to be a real or a movable property. So long and the short, it has to be land or building, and it has to be in Canada. And we have a business or organization that's renting or owns it, and it's used in the regular course of the business activities. What doesn't qualify would be personal use property. So our home, our cottage, any other residence that we have or are using by ourselves or a non-arm's length person. So non-arm's length being someone related to us or that's very close to us. And the last restriction is a property that's used primarily to earn rental income from arm's length people. So this is to preclude people that are commercial rental properties or landlords from accessing it, because the fear is, or the restriction stops us from having both the landlord be able to collect it and also the tenant. So rent expenses. So I think we've talked about this a few times, but again, these are our maximums per period, and the $75,000 per property per period, and $300,000 for now that we know what an affiliated group is for the affiliated group per period. And the $300,000 again is just the base subsidy. There's no maximum on the top up. We can have as many locations as we have access the top up on the 25%. Excuse me. So what are qualifying rent expenses? So in order to qualify, we have to pay an amount to an arm's length party. So it has to be paid or payable. Right now, the legislation actually reads that it has to have been paid, but there is a proposal. Why does this keep doing this? Sorry, I'll take my hand off my mouse. There is a proposal that has been already drafted that includes payable, and all of CRA's documents also talk about amounts being payable. And that's to allow people to be able to collect so they may not have the cash flow to pay their rent or their bills at that point in time, but they're able to then collect the subsidy and then within 60 days be able to pay that amount as well. So the expense has to be in respect of an actual claim, or the actual claim period. So we went through what all of the periods are. So it has to be in respect of that period. And the expense has to be pursuant to an agreement that was in place on October 9th. So that's the date that we have to have that agreement already in place by, is October 9th. Or it can be a renewal of an existing rental agreement or an assignment of a rental agreement. And so this is, I guess, to stop any retroactive planning with respect to new rental agreements in place. And if we are earning any sort of revenue from a sublease on our space, we have to back that out of our rental expenses. So what's actually eligible? So if we're dealing with a rental property, so I'm renting from somebody, I don't own the building, I'm renting it. So the rent itself is eligible, and any amounts that I am required to pay under the lease. So if your lease includes amounts for operating expenses, property taxes, or municipal or school taxes, or any sort of common area costs, those would be considered to be rent, and we would be eligible for the rental, the eligible rental expenses. We cannot include any sales taxes, interest, or penalties on unpaid amounts, or any amounts relating to damages. And if your landlord has already collected amounts with respect to the CECRA program, you still can qualify for the current period. So what if we own the property? Are we precluded? And the answer to that simply is no. We're now able to take certain expenses that we pay for our property and use those as kind of our quote unquote rent expense. And so what's included here, it would be our property or other taxes. So your school taxes, your municipal taxes, your property insurance, and any interest that you pay. And there is a formula here, or a limit to ceiling on the amount of interest that we pay on our properties. So it's limited to the lesser of the cost amount of the property or the lowest principal amount on that mortgage or that's secured on that property. And this is just to stop any refinancing funny business. So I guess just when I actually intend to go back this time. Maybe I don't even know how if I want to. So I'm going to just stop there for one quick sec. Some of these things like property taxes, for example, are paid on a per annum basis. We know our property taxes are all due on, well, in a normal year, quote unquote normal, we're due in the beginning of July. And so it has been said, and it's not legislated, but that we're able to take and divide our property taxes, for example, that are paid on a per annum basis over the 13 periods that the program would cover, and include 1/13 of that expense as a reasonable amount. So again, we're talking about amounts that have been paid or again are payable. So when are they considered to be paid? So it is considered to be or deemed to be paid by the eligible entity on the date that it is that it became first due. So on the due date, now we are considered to be paid. And if it's not actually paid, we're attesting in our attestation that we will pay it within 60 days after we receive the subsidy amount. So that again is allowing us to receive the cash flow from collecting the subsidy prior to having to make those payments if cash flow is tight. So we've danced around the rent subsidy top up a whole bunch, and we've talked about what the percentages are, but how do we get into it? What are our criteria? So the top up is tied to having a public health restriction or an order from one of our governments. So it can be issued by any level of government, so federal, provincial, municipal, or even a local health authority. And the health order or the restriction is limiting the geographical boundaries, so who's allowed to travel. It's limiting the type of business or the activity that you can have in your business. And it's also dealing with risks associated maybe with just a particular location. If there are sanctions or if it's an offense to not comply, it would be considered to be a restriction or an order. And you have to have some requirement to stop an activity or a business. So in the situation where we're dealing with, a restriction or a reduction in what we're allowed to do in our business, that's not a cessation of the business, and that actually doesn't qualify. So it has to be a stoppage of that business or a part of the business. And if it's only a part of the business that has to cease, any activities that we're not able to carry out or continue on with because of the health order has to account for at least 25% of our revenues. So let's look at a kind of, I guess, a local example. So if we're dealing with so restaurants would be one of them, and I have an example later on about them, but a hair salon. So a hair salon has generally both retail and services that they offer. So right now in Alberta, they were ordered shut as of the 14th. So services were ordered shut. Retail can stay open. So as long as their services constitute at least 25% of their total revenues, that business had to cease and is not just restricted, so they would qualify for the top up. If it doesn't constitute at least 25% of their total revenues, then we would be outside of this lockdown order. So we chatted about the formula here earlier. So again, it's a 25% fixed rate, and it's just dependent on how many days we have that were ordered to be shut during any period. There's a requirement that we have to be shut for a minimum of a week in order to qualify for the top up. The legislation doesn't talk about, you know, a week during a period or a week. It just says a week. So presumably it is, as long as you are required to shut for at least a week, you would qualify. So you take the number of days that your location was locked down because of COVID and the order, and divide it by the number of days in the period, which is 28 because of the 4 weeks. So each location has to have a drop in revenue. So again, it doesn't matter how big of a drop, but you have to have a drop to get into the top up. And we have to have some sort of a health order where we're either temporarily closed or we're significantly restricted for at least a week. So what doesn't qualify? So if we simply have travel restrictions, so we're supposed to stay home right now, people can't travel, so the travel restrictions are reducing the number of clients that may visit your premises, that doesn't qualify. Rules about how you perform your regular activities, so if you have to restrict your hours because there's a curfew, or if you have to restrict your capacity, again, doesn't qualify. So anything that doesn't specifically stop us or order us to close or shut down a specific activity will not qualify. Unless we're specifically told we have to shut something down, we don't qualify for this top up. So a good example here is prior to these most recent announcements, we were dealing with reduced capacity in restaurants. That did not qualify or would not have qualified for the lockdown support. And likewise with retail stores right now, they are allowed 15% capacity, so they are not considered to be locked down. If you are already closed or restricted to be restricted or closed because you failed to comply with a health order, so you broke the rules and now are ordered to be shut, you do not qualify for lockdown support. So where does Alberta fit into this? So as of Sunday, well, prior to Sunday, we had this state of emergency declared, but as of Sunday, we have our restaurants closed to in-person dining, and our retail services are reduced to 15% of our fire code capacity. So I can't do that if I try, but I can if I don't. So with our restaurants, as long as their in-person dining was at least 25% of their revenues, they would qualify. But as I mentioned with respect to the retail services, because we're able to still be open and operational at even 15% capacity, they would not qualify for lockdown support. So just for the sake of time, I'm going to just glaze through some of these maximums. I think we've talked about what the calculation looks like multiple times, but here it is. And this is a nice summary slide here outlining what the different levels of revenue drop will result in for a subsidy amount. So again, we've talked about if you're greater than 75%, you're into the maximum. And excuse me, so the maximum would give you $48,750 of cash flow if you have the maximum expenses of $75,000. And you can see it just slides down the scale. So just to run through the top up calculation quickly. So if we have a Grande Prairie restaurant that was ordered to be closed as of December 14th, if we have takeout and curbside pickup still, we still get to be open for that, but this only constitutes, say, 30% of our revenue. So our in-person dining was normally a 75% of our total revenues. So if we have 75% is greater than the 25% requirement for something to be closed down. And now we have a revenue decline of 75% as well due to the shutdown. So we know we qualify for our base subsidy, and we're going to get the maximum because our revenue decline was the 75%, which is greater than 70%. So we're going to get our maximum subsidy rate of 65%. And then our top up is going to be calculated by the number of days closed. So fixed top up rate is going to be 25%. times by 5 days. So 5 days in the period divided by 28 days. So we're going to get an extra 4.46% of our subsidy as a result of the top up. All right. So Carsey, do we have any more questions at that point?
None in the chat box yet. So if anybody does have questions as Tracy and Heather are going through everything, just a reminder, you can throw it in the chat box and we will monitor them and answer them as we have some breaks.
Perfect. All right. So Tracy.
Non-arm's length again. So we're going to get into a few more details here with an example and kind of talk our way through it. So with this, so we're going to start off with, and it's easiest kind of to talk about a company that owns its own property inside the company and uses it in its business. So again, we usually start off first with what is our revenue decline. So we've calculated our revenue decline. And then because we are using the property in our business, we really don't have a rent expense because we don't have anyone to pay rent to. We own our own business. So now we look at our qualifying expenses as our property taxes, insurance, and our qualifying interest for the period. So then we also have to look at when they're considered paid. And again, as Heather had mentioned, when it comes to our property taxes and insurance, and I was told to just write on the application on CRA's website now, they are asking you to just enter in your annual property taxes and insurance, and they will do the prorations of basically calculating what it is for the 28-day period. And then with the interest, again, it is looking at, okay, what interest was paid in the period. So you might need to just go to your bank, financial institution and get, okay, what was the interest on our mortgage for that period. So now that you have those numbers, then we can go and see what our calculation will look like. And this one, I made up some very fictitious numbers here and some nice round even numbers to do the calculation. So this business has our 28-day period of property taxes turned out to be $1,000. So is our insurance. And we've got a high rate or lots of debt. So our interest was $3,000 for that month. So that gave us $5,000 of what is considered eligible expenses for our claim period. So then I wanted to see, okay, if our revenue declines are greater than 75%, we've reached the maximum subsidy of 65% on our $5,000 of expenditures, we will be entitled to a subsidy of $3,250. If our revenue decline though is 60%, now we're into doing some math and working through that formula, and it tells us our percentage now is 52.5%. So that gives us a subsidy then of $2,625. And then as we see with the sliding scale, if our revenue decline is only 40%, we're now in the formula of 0.8 times our 40%, which gives us a 30% claim. And then our subsidy then 32% of the 5,000 would give us $1,600. So again, depending upon our expenditures and what our revenue declines are, you can see here where you end up with, I guess, quite a different claim. But again, not, once we've done the work to figure out what the revenue decline is and what our expenses is, the rest is just doing the calculation. So that was a very simple example where the company owned its building and used it. We do have, there's a lot of situations where we've got an operating company that is paying rent, and the operating company might be owned by the holding company, or it might be owned by other, and in this example, we have to remember it's non-arm's length individuals. So it might be Mr. A owning the holding company and Mrs. A owning the operating company, or it could be their parents or their children. This would apply to all of those situations. And we have the operating company now paying rent up to our holding company. So now we've got a bit more work to look at. And so now we first have to look at, okay, how are we calculating our revenue decline? Because now we need to look at our holding company and we need to look at what revenues the holding company has received. And again, when we look at our revenue definition, we have to remove all non-arm's length income, which would be the income received from the operating company as rent. So now we have to look at, once we've removed that, what's left over. And they use the words is all or substantially all the revenue from our non-arm's length source, and all or substantially all always kind of looks back to, is it greater than 90%, or substantially all when we look at our normal revenues. If no, then we need to just look at what revenue we have left over, and Holdco would then calculate its revenue decline. If it's yes, then we can make that election that we talked about earlier with regards to just Holdco calculating its revenue decline based on the revenue decline of the non-arm's length source. So now we could actually look to OPCO, and if OPCO has had a significant revenue decline, that's the number we can use. We can also, and I didn't get into the two, if it's just owned by the same person or a husband and wife or two spouses owning the businesses, then we can also look at the affiliated election if that will give us a better result. But here I would say for a lot, we are kind of looking at the non-arm's length sources. And again, as long as more than 90% of our revenue is from that in our holding company, we can now look to OPCO for our revenue decline. But we also have to look at, we've run into a lot of holding companies where they might not just own one rental building used by a non-arm's length person. They might also have rental properties rented out to third parties. So again, our numbers might become quite complicated with that. So, and I would say, I just want to kind of leave there, once we calculate our percentage, it's the same calculation then of using that to do our prior calculation. And I'll make you move on, Heather. So some other items of note, and I think I've got a few more things to go through here. So again, we talked about doing some of those elections based on the period. There is also, and this is the same with the wage subsidies, you may have looked at, am I calculating my revenues on a cash basis or an accrual basis? If you've gone down that path and selected one or the other for your wage subsidy claim, you have to use the same election for all of the periods, and who knows how many periods we'll get to, up to 10, and going into the future, you'll still have to use the same cash or accrual, and the same for both the CEWS and the rent subsidy. Now with the accrual method, again, that would just be based on what we discussed with the revenues of your general accounting principles on how you generally account for your revenues. If you've actually run into where you've either purchased assets of a business or sold, again, these rules become quite complex, but there is elections in place to allow the purchaser to kind of continue in the same footsteps as the past owner. And again, when we talk about the rental agreements, they have allowed for, if it's a continuation of a prior rental agreement to a new owner of the operations of the business, those will continue as well. But again, very complex, and amalgamations as well. If you've amalgamated your businesses at this particular time during these periods, again, we've been looking at, and it's now the right time to be doing these steps and moving business and moving assets around. But we've always gone back to, we can't let these subsidies dictate good business practice, but we can't ignore them either as they continue on into the future. So please seek out some help there. And so the timing, so all of this has kind of just gone on where we thought we had some hard deadlines back in September for some of the subsidies. And now they've kind of gone to say, we now have a 180-day period or due date subsequent to the end of our qualifying period. And they've also, when they pull it into the wage subsidies, we do have kind of a January 31st due date for a lot of the first periods with the wage subsidies. So with this, we do have to kind of be aware that our first applications are due now for April 22nd. So again, watching with the timing, I know with some complicated businesses, it does take a while to work out which path you're going down. But for most, if it is quite simple, the programs are open now, and you can just go onto Revenue Canada's website and file your subsidy claims. If you are one of the unfortunate, or the chosen few that might receive a notice of determination or a notice from Revenue Canada saying that they don't agree with your subsidy claim and have issued you something different, you have only 90 days to really appeal against that. So please, if you are getting some paperwork from Revenue Canada about your claim, make sure you're asking some questions and seeking out some help with it. The 90 days goes by extremely quickly and does require some time to reply back to CRA. Again, we talked about someone attesting to the form, and there is a new form very similar to the wage subsidy form that we'll show here in a minute. And again, one of the qualifications was to have a payroll number in place, but you don't need a payroll number or employees to qualify for this. A lot of this, and there is some confusion because they have brought in the rent subsidy rules in amongst the wage subsidy rules, so it does make things kind of confusing, but there is some exceptions to that, so don't get hung up on if you read somewhere that you needed to have the payroll number. So here's the form. I'm not sure how well you can see it. I broke it up into 2 slides, but it is, again, filling out, and this will fill out for you as you're doing your claim online with Revenue Canada. And it is to know, if you are making any elections, they kind of refer to them just in sections of the Income Tax Act. So make sure you're asking to make sure if you are checking the right box there, and to make sure that you are, here's all that you're saying that, yes, I agree to all of this when I make my claim. And I think the next page here shows the election. So if you are making an election, again, make sure you're checking the right box with it. And with a business, so with a company, they will have one individual needs to fill out and say that they're responsible for that paperwork, and they're the ones that Revenue Canada will question, and they're the ones responsible for it all being correct. Documentation required. So for each qualifying property that you are claiming on, you need to have copies of your expenses, what the property address is, and who the contact information is. If there's a mortgage, who the holder is, and if there is a landlord, who you're paying rent to. And I do understand, I think we have filed a few claims now, and they are looking at quite a bit of information on the first and a few claims where we've had Revenue Canada request property tax assessments, kind of insurance, and information on the mortgage interest. So I would say, make sure that you do have these documents in hand when you are making your claim, because with it, if you're making a claim, Revenue Canada has tried to be very on top of response, and you may get a phone call within a couple of days of making your claim with them requesting more information. And I do caution everyone, if you are getting phone calls, please make sure you have verified that it is Revenue Canada you're talking to, and they should be requesting that you just upload the documents onto their website. If you're suspicious of anything, please reach out and talk to your accountant, because we can reach Revenue Canada on your behalf as well, just to make sure that it is them that you are talking to.
All right. So I recognize that we're after 11 here, guys. So if anybody does need to hop off that had scheduled themselves an hour, we apologize for running over. We do, this is kind of the end of the wage subsidy, or the rent subsidy portion. Next up, we're going to talk a little bit about the updates to CEWS and the other programs. So again, if you need to hop off, we apologize that we've run over, but we're going to carry on here as well. So just with respect to documentation, again, Trace has kind of outlined a lot of this, but if we're dealing with any affiliated entities, we need to have an agreement for each qualifying period. and it has to outline the information on the screen here. So it's going to address who the affiliated entities are, their business number, how much is assigned to each entity, and the total assignment can't exceed the 100%. So this is for that $300,000 maximum threshold. There's 10 spaces on the form for affiliated entities, and if you have more than 10, just keep a record and they may be requested, but just start at the highest percentages and work your way downwards. Okay, so other programs.
Hey, Heather, before you move on, we've got some more questions on rent subsidy.
Oh, sure.
For new businesses that don't have 2019 or January, February 2020 comparatives, which reference periods can be used for revenue calculations to determine decreases in revenues?
I was gonna say that's a really good question. I think Heather and I both have the same answer of haven't run across that yet.
Yeah, they clarify that you don't have, like, you can have as long as you have the business number or the start as after September, but they haven't clarified what reference periods to use for the revenue decline.
Okay. For the allocation of the 300,000 rent subsidy among the affiliated group, is there a formula or suggested method to allocate this, or is this up to the applier to monitor?
I think it would be up to the person, the applicant, and if you're maxing out the 300,000, I don't think that there's probably a lot of strategy for allocating the amount. I don't know if you disagree with me there, Tracy.
No, I would say it's up to the group there to allocate it how best it would fit the structure.
Yeah, and how the cash would be best used, I guess, in the structure.
Okay. Sticking with affiliated groups, if we choose to elect to use the affiliated groups under the rent subsidy, but have not used it in CEWS, is an amendment required for the CEWS applications in the prior periods already filed to use that election?
And yes, that would be a yes, because you have to use the same affiliated. If you're doing an affiliated election, it applies to both the rent subsidy and the wage subsidy, and you may have to go back and recalculate your wage subsidy if it's impacted your revenue declines.
Wonderful. Okay, and last one here for rent subsidies. On the attestation forms and the elections, if they have elected any of the chosen elections there for CERS, do they actually have to be filed with the CRA, or can they just be signed and kept on file?
At this point, they can be signed and kept on file, and there isn't a lot of, I guess, forms out there with the elections. A lot of them just have to be done up in letter format and signed by the parties.
Perfect. Thank you.
Thanks, Carsey. Perfect. So on to the CEBA. So the CEBA was introduced back in, I guess, March for the first round, and this is the $40,000 loan, of which the 10,000 or 25% of it is forgiven. So there, as of, I believe it was December 4th was the date, the next tranche of this was introduced, and it's going to be another $20,000 loan for a total of 60, and another $10,000 of forgiveness. So the rules on accessing CEBA haven't changed in respect of this new tranche. Like, we're still dealing with if there's two ways of getting in. One is by paying employment income in 2019. So we had to have had employment income between 20,000 and 1.5 million to qualify. And we have to have the intention to continue our operations. At some point in time between the introduction of the program and, you know, kind of as the first of the applications were coming in, there was a little bit of a shift in the applications on what the definition of, or what the money was being used for. I think in the first kind of few applications that went through, they didn't define the usage of the funds. It just said that it had to be used for non-deferrable expenses. Once additional applications went in, the applications slowly started to change, or once they kind of figured this out, and the total non-deferrable expenses was actually defined. So just recognize that there is a requirement that it be used for specific things. And if you are signing up for the second tranche or the additional 20,000, these are being done as an amendment to your loan agreement. And so it actually might change the terms of your original loan agreement as well. So just be conscious of any amendments there. So the second way into the CEBA is if we didn't pay wages. So maybe we had a dividend strategy, or we didn't quite meet the $20,000 threshold. Our second way in is by having a business number and having filed a tax return in 2018 or 2019. And we had to have had non-deferrable expenses of between $40,000 and $1.5 million and a checking account or operating account with the bank. There's also the requirement that we've never applied for support under the program prior. And we also have the requirement to comply with any any studies or any questions, surveys, that's the word I'm looking for, surveys after the fact that may come up from CRA with respect to this. So jumping into the CEWS, we've talked a lot about the various rent subsidy calculations and how the revenue is calculated. And as we've talked about extensively, those are calculations that get used for the CEWS as well. So we just really wanted to highlight a few of the changes that have been made here over time. So as some updates, our deadline is going to be the later of January 31st, 2021. And 180 days after the end of the qualifying period. So we are going to have a bunch of CEWS applications probably due here at the end of January for the very first few periods. And then after that, it's 180 days after your period, just like with the rent subsidy attestations that Tracy just mentioned. So the next periods, again, not legislated, but hinted to be December 20th to January 16th, January 17th to February 13th, and February 14th to March 13th. And our maximum subsidy is going to be 40% plus 35% top up for all three periods. So when CEWS, or 2.0 as we call it, so the second round of CEWS came out, there was supposed to be a sliding scale, or it was legislated that there was going to be a sliding scale that slowly the amount of the wage subsidy was going to decrease. But recognizing that for a lot of businesses, these next 3 months are actually pretty difficult after Christmas, and cash flow is tight and things are usually pretty slow. They've already announced that they have set what the maximum will be, and it's no longer tied to that sliding scale. It's going to be this full 75% if you qualify for the top up. So from the original version had that if we were off, or you had an eligible employee that was off for 14 or more consecutive days in a period, they wouldn't be eligible. Now we are, and so that carve out's just for the first 4 periods. And then there was a top-up revenue reduction that was introduced in the version 2.0. Originally, it was tied to the 3 prior months revenue decline. And so there was a second option on calculating that came out. So you can use either your revenue reduction percentage for that month, or you can still use the 3-month average, whichever is going to give you the better result for your top up. So just a little summary of what the subsidy amount is. So again, we still do have a sliding scale. So once we have a revenue decline of 70% or over, that's where we reach, our maximum of 40% subsidy. And we're eligible for the top up there as well. Once we're under 50%, that's where we lose our eligibility for the top up. So just a little bit more here on the top up. So as we mentioned, it's going to be a 35% maximum of an additional 35% that we're eligible for. And unlike under the rent subsidy, this top up is not a fixed amount. It is going to be calculated based on what your revenue decline is. So as I mentioned, we can either use the 1 month revenue drop, so a revenue decline for that period, or we can look at what our average 3-month rolling decline is and compare that to the same 3 months for the prior year. So as an example, if we're looking at July, we look at April, May, and June 2020 compared to April, May, and June 2019 and look at what the revenue drop was there. If that's greater than what our 1 month revenue drop was, we can choose to use that. But if our 1 month revenue drop for July was a greater amount, then we would obviously elect to use that to get the best result. There were some new announcements with respect to furloughed employees. So a furloughed employee is somebody that's on leave with pay. Originally, they just fell into the regular wage subsidy rules. And we were, the one kicker here was that we could claim the CPP and EI as eligible amounts as well, in addition to what their regular wages were. They still are considered to be paid eligible remuneration for purposes of the wage subsidy, but now we're going to calculate the wage subsidy based on this formula. So it's going to be calculated as the lesser of the actual amount paid in respect of that week, and the greater of $500 and 55% of the pre-crisis earnings up to a maximum of $595. And this newly introduced furloughed amount is to marry this up with the EI benefits as well. So looking way back to the beginning of the pandemic, and this was introduced, this was the very first wage subsidy that was introduced back in March. And this would be the temporary wage subsidy. So this was the 10% subsidy that was introduced. We had to have employees, we had to have a business number on March 18th, 2020. And this was to compensate eligible employers for, it was 10% of payroll costs up to a maximum of $1,375 per employee or $25,000 for the employer overall. We are going to have some work to do on the PD 27 or the payroll form this year to reconcile the payroll account. And there's no deadline with respect to filing the TWS or temporary wage subsidy, but we're going to have this figured out before T4s are filed. So with the temporary wage subsidy, we could have asked for a refund on the 10% subsidy, or we can actually reduce our 2021 payroll remittances by the amount that we qualified for here. So fresh off the press, this came out, I believe, in the payroll guide on the 14th, so just a couple of days ago. It was announced how the information required for T4 reporting. There's information or additional boxes that have to be added into the T4s this year to report earnings for each of these different periods. And the reason for this is to help validate the CEWS, the CERB, and the student benefit payments that have been made. So there's 4 new codes, 57 through 60, that have to be included in information boxes, and you have to disclose any employment income that was earned in that period. They further did state if you've already filed your T4s prior to this, you don't have to amend them. All right.
So on to some new individual benefits, and these ones I just want to very much highlight a few points of them, but we don't have the extensive rules for any of them, so we will tell you to please check with Revenue Canada's website before applying. But they did introduce kind of 3 new individual benefits: the Canada Recovery Benefit, the Canada Recovery Sickness Benefit, and the Canada Recover Caregiving Benefit. So all of these kind of have similar basic rules here. And again, these aren't the extensive rules to any of them, but all of these programs go from September 27th to September 25th, 2021. So they're kind of looking at having rules in place to get through the next year. Most of these are paid out in 2-week benefit periods, and generally you'll need a valid social insurance number to be at least 15 years of age. This one was interesting, resident and present in Canada during the 2-week period. So if something happens where you can't work, you have to actually be in Canada. So if you are traveling outside of Canada and get sick and then can't work, you won't qualify for these benefits. You have to be back present in Canada. And you can't receive any other benefits such as sickness benefits or EI benefits with these. There is an income test, and the income test, there's quite a bit more rules to this, but basically you need to have at least $5,000 of income in kind of 2019, or if you're applying in 2021, in 2020, or looking at the prior 12 months before you make a claim. So with the Canada Recovery Benefit, this one is you're eligible if you're not employed or you are self-employed and can no longer work due to reasons of COVID, and your average weekly income has dropped by at least 50% compared to the prior year due to COVID. So you've had to have not being able to work because of COVID and a 50% reduction in what you are receiving if you're still able to work a little bit. And you're not eligible for EI, and you can't have quit or voluntarily reduced your hours. So this was something out of your hands where you could no longer work. And during this time, you have to have been seeking work and can't turn down any reasonable work that's been offered to you. The benefit is $1,000 for every 2-week period. And at this point, because there was such a large issue, and there will be an issue this spring with people who had received the CEWS benefits, that there was no taxes withheld, and there's likely some people that are going to get some ugly tax bills come the spring because of the benefits they've received. So here they're taking off $100 of taxes. With this one, you can claim up to a maximum of 13 2-week periods, and then there is a repayment requirement as well. So if your income annually, so if you're making this claim in 2020 and your income was over $38,000 for the year, you'll have to pay 50 cents of the benefit you received for every dollar your income is over the 38,000. So they're really targeting people who have lower income that aren't able to work with this benefit. And again, you don't need to claim it all at once. You can claim these 13 weeks at any time during, or sorry, these 13 2-week periods at any time during the next year. The caregiving benefit, this one is looking at then that you are not able to work, or if you're self-employed, not able to make income because you're caring for either a child under 12 or family members needing supervised care. Oh, pardon me. So it will apply then if schools or facilities are closed or unavailable due to COVID, or if you are sick, self-isolating, or risk of health complications due to COVID. So again, this one is tying back to reasons with COVID. This benefit is $500 a week minus $50 for a total of $450 per week. And this one is paid based on household. So only one member of a household can claim it. And again, this one is up to a maximum of 26 weeks from September 27th to September 25th of next year. So again, this is just kind of the highlights. If you think this might be applicable to you, please make sure you're going to Revenue Canada's website, where they do go through checklists of these benefits to see if you do qualify or don't qualify. And with this one, we do have to make sure what member of the household would be claiming it. It is income to you, but you also have to have had income in order to meet the requirements to claim it. And then the last one, which the only interesting thing I thought was with this one, is this is because you cannot work or your income has declined of greater than 50% because you're sick or self-isolating due to COVID. The benefit is $500, again with taxes off, $450 per week. But because this is going back to yourself, you can only claim a maximum of 2 weeks. So you can only yourself be sick or self-isolating for a maximum of 2 weeks over the next year. So again, I hope no one here on the call will ever have to apply for this one, but if you do find yourself in this situation, please again refer to Revenue Canada's website to see if you do qualify for these benefits. And that's, again, just reiterating that. And here's kind of a snip of what the website looks like. And they do have all the benefits just laid out there that you can click into and see what you do can apply for.
All right, thanks, Tracy.
We've got a couple more questions if you guys want to stop on those benefits.
Sure.
For qualifying for CERB, the $5,000 income requirement, is this net income or gross income?
That generally was gross income of a business, but again, I would refer back to the website to see how they've defined it, and they do have it defined on the website.
Okay. And for CEBA, if they do not have payroll or expenses over $40,000, is there indication that this is an all or nothing? Do they have to have $40,000 or can they have less and still qualify?
I believe it's an all or nothing. So if you either have to get in through having salaries or you get in through having the non-deferrable expenses.
Thank you.
Perfect. Thanks, Carsey. So we're rounding the corner, guys. The last couple of slides here. But again, very relevant given our lockdown here as of late. So I wanted to touch on the Alberta Small Business Grant, also known as the relaunch, that's been recently announced. So this is the grant that's being offered by our provincial government, and it's intended to offer financial assistance to businesses, cooperatives, not-for-profits that were ordered to close or curtail their operations. So in order to qualify, we have to have seen a revenue reduction of at least 30% as a result of the pandemic. And it has to be actually 30% in April or May of 2020 in order to get in. And then there's a second payment that would come here as a result of this newest lockdown. There's two payments for eligible applicants, and it's up to $20,000 that's available for the total of the program. So with this grant, businesses are able to use the money as they see fit. It can help defray some of the costs of relaunching or reopening, introducing new physical barriers, purchasing PPE, paying rent or wages that even while they were at maybe a reduced capacity. So it really is as you see fit, but it is intended for small and medium-sized businesses. So I believe it's 500, you have to have less than 500 employees to be into this one. And the way it works is that the first payment was calculated based on what 15% of your monthly revenue, your pre-COVID monthly revenue. And so we had to see that revenue drop. So we had to have had at least a 30% revenue drop in April or May. And then we get to look at what 15% of 1 month's worth of pre-COVID revenue was. And so that's going to bring us to a maximum grant in the first application of $5,000. The second payment is going to be, we're eligible for it, for anybody that has curtailed their operations as a result of the most recent public health order, so the one announced here in November, and it's going to be 3 times the amount of the first payment, up to a maximum of $15,000. So the total is $20,000. If we didn't have that revenue drop in April or May, I can't see anything that allows us to use a different period to apply when I was looking at the applications. So if we didn't see that revenue drop, I don't believe we're eligible for the second one there. But the second one just requires you to take and to file. It's not a new application. It's a update or a second payment on the government portal. If you do try to apply again, it's going to kick you out based on doubling up. So you just have to make sure you click the right button on the government portal there that it's a second payment. And it's going to be 3 times the amount that was approved on the first payment. I've included the information there on the relaunch website for more information. They do have a fairly lengthy guide on the website that you can refer to there as well. All right, so you've spent an hour and a half listening to Tracy and Heather talk, so I'm sure you're ready for us to be done. So just a couple of take-home points here. What does this mean to you? I think that things are constantly changing here in light of, you know, new lockdowns, new programs, changing of programs. So make sure you are taking the time to review your eligibility, because, you know, your facts may have changed since you originally looked at some of these programs back in the very beginning. Recognize that a lot of these rules are complex and hard to navigate. As a firm, we have spent hundreds and hundreds and hundreds of hours on these. And feel free to reach out for help if you need them from your advisor or to one of us. And more people are becoming eligible for these. You know, we're constantly in communication with the government on, you know, the impacts of some of the wording they've made in the legislation. And we all have to recognize that the government's introducing things in a really quick hurry. Usually it takes a lot longer for them to draft legislation. So there are things that are getting missed, and we are constantly in communication saying, you know, what about this? Did you realize that, you know, the way this is worded, you preclude this situation? But more and more people are eligible, and if you are eligible for the CEWS, you can use those same revenue drop or decline calculations for your rent subsidy as well. And we just wanted to take a quick minute to thank the Business Resiliency Task Force and the Chamber for inviting us today and organizing this all. You guys are doing a fantastic job in our community, keeping everybody up to date and on top of what's going on and supporting our local businesses. So with that, I'll leave you with our contact information and an opportunity to ask any final questions and hand it over to Tom.
Wow, thank you, Heather and Tracy. Just a fantastic bit of information. We're so blessed to have partners that are willing to take the time to prepare and present this information to the community. And so thank you very much. And I want to apologize for not formally acknowledging and introducing Carsey at the start of this. Carsey is a member of our board of directors and a valuable part of our chamber, as well as being a terrific part of this presentation from MNP. So thank you to everyone there. And again, the floor is still open. If you do have a question or two, either raise your hand or type it quick in the chat box. And if we don't see any questions, we'll just remind you once again about the Love Local GP. Show your love for local business right now. They need it, folks. Tag them, tag us, the chamber in the city and the county on Facebook, and you could win a $200 gift card to support that favorite business of yours. And then for the grand prize draws, you can win $500, $1,000, or $2,000 even. So what a great way to boost some revenue back into the economy, much needed. And other than that, if we don't have any more questions, once again, we thank Heather and Tracy and Carsey from MNP. And on behalf of the Business Resiliency Task Force, the Chamber, the city, and the county, we'd like to thank you all for being part of this presentation. And we will be sharing it on a YouTube channel, and we'll get that link out if you want to review the information that was on here or share it with other folks in the community. And watch out for more presentations in the future. We're always constantly looking for ideas and trying to react and respond to questions from the community if they have topics that they'd like to see covered, and we will find other professionals that are so willing to help us out and get the word out. So thanks everyone. Have a great rest of the day and week, and we will talk to you soon. Bye now.
Thank you.